Hi, my name is Ari Sussman. I'm the executive chairman of Collective Mining. Collective is a exploration company focused on making large-scale discoveries in Colombia. Currently, we're drilling a project called Guayabales in a fantastic region of the country that is pro-mining, and we're focused on what we're drilling are some wonderful intercepts of gold, silver, and most importantly, copper.
Always copper. How are you doing, Ari?
I'm well. How are you?
I'm enjoying it. I'm enjoying it. A bit busy and very tiring because it's relentless. We're at it from, you must be stacked with meetings.
Full.
Who are you meeting? What sort of meetings do you want to have?
Interesting conference. If you're a contrarian like I am, there's a bullish sign out of this. There's very little buy side here.
Yeah.
It's full of corporates, companies like ourselves, and more debt style or private equity style lenders to the industry. Very few buy side funds. That reminds me of these conferences in 2015.
Yeah.
And maybe we're at that same place now of September 15th, and next year might be interesting.
Okay, well, tell the audience what you think it means. What should it mean to them?
Well, look, it's very simple. Buy when they cry and sell when they yell, and they are crying. There is no interest in the mining space right now. It's a curious market because, I'm in gold, I'm in copper and silver, and the prices of the commodities are actually good. If you're a producer, you're making quite a bit of money right now. I mean, your balance sheet's strong, but the equities have been in a bear market since 2012. Okay, and if you look back over the past century, the bear market in the equities tend to last about a decade. So we're really at the tail end of that disconnect between commodity prices and the equities. And I strongly believe there's going to be a big move coming. What the catalyst is going to be, I don't know. Nobody does. But,
yeah.
We see what's going on in the world. Rates are rising at almost an exponential rate in most countries, and something's going to break again. Whatever it is, it will be, and eventually will reverse course. The panic will set in, rates will come down, and I think we'll see, especially the precious metals, really have a nice move.
Yeah, it'd be interesting. EBC, European Central Bank, this morning put up the rates. Again, we thought we had reached the end of it, but oh no. I suspect the Fed will do the same, follow suit? Right, okay. So we're nearly there, but not quite there. But if we can get to the point where we have no more rises, your expectation is gold will follow its historical path and react positively.
Yeah, well, I think we're going to hit a recession. We're way overdue for one on a historic nature. It will fall initially, like it always does. Liquidity becomes the key for anyone in the world. So they sell what's liquid, and gold will go down for a period of time. But if you look at past recessions, it's the first thing to turn. And when it turns very hard and very fast. And I think we're going to see something similar.
Do you think we should have done this soon? I mean, all this soft landing business perhaps delayed the inevitable, right?
Tell me the last soft landing. You could argue COVID, to do it 2020 was, but they had to print trillions to do it. That's not going to happen again. So there is no such thing as a soft landing.
I agree with you, unfortunately. Right. Well, let's talk about things slightly more positive. Your share price. What have you done? Because that's the only chart I've seen looking like that. So what are you doing right that others aren't?
It's not us. I wish I could take credit for it, but Mother Nature did it to us. We've stumbled upon a wonderful discovery. It's a porphyry system, and it's a combination of bulk long intercepts and unusually high grade for porphyry. What Mother Nature has done here, instead of there just being porphyry mineralization, Mother Nature overprinted the porphyry mineralization with late-stage high-grade porphyry veins. These are gold, silver with a little bit of lead, zinc veins. And that soup mix, so to speak, or salad bowl, has yielded high grade. So we're drilling bulk tonnage intercepts from surface at high grade. And that's what's driving
But I know you've done this before, but you've had to do it again. And people come in here quite often talking to me about being quite near to a porphyry somewhere out there in them Bar Hills, but never quite managing to hit. So tell us a little bit about secret sauce in terms of targeting and drill modeling.
Smartest minds in the game. That's my success. I'm just a guy that can hopefully raise money on the back of some success. I employ or use consultants that are the smartest in the world at this stuff, and we put a lot of thought into it, and we're rigorous, and we say no. We don't fall in love with things unless we're really sure, and so that's been the plan. And our Guayabales project, it was a long process to get it to the drill ready stage, and we put a bunch of targets that all had check marks instead of X's, and we've systematically been drilling them. We've tested 5, We've made discovery on 4 or 5, 1 missed, so we're not perfect. Apollo's being the biggest one of the 5 so far. But we're currently testing 2 new targets right now for the very first time. So we're excited.
But how does this game play out? Because I love the headlines. 500 meters at 2 point whatever grams, nice. And everything is similar to that, sounding to that. But what's the game in terms of moving through the phases here? Because the market has been tough. You're talking about a 10-year bull market. The last 3 have been particularly tough on equities, for sure, with inflation sort of hitting those margins for all the producers. So it is a high price, but also affecting margins. How do you play this game in this market? Some people will drill, and some will go, well, we need to get some revenue here. So how are you phasing all of it?
We're fortunately decently funded. We don't need money anytime soon. So we're going to drill. I mean, when you have a tiger by the tail, you have to really go for it. If the market was in a different part than it is today and it was really robust, I would add more rigs. We're at 5. I would happily go to 8 or 10 right now. So that's the conservatism based on the sentiment. We've got $23 million US in cash, and we have about $6 million in warrants that are well in the money. We've got a year and a half of almost 2 years of current burn rate.
Right.
I wouldn't want to double it right now without more capital.
Okay, I said current burn rates, right? So, but you've got the optionality around how you deploy and how many
we could shrink if we really had to.
Right, that's where I'm going with this one. Can you CEOs love to come on here and tell me what they're like? Compare us to a Fosterville, if I hear that phrase again. It's like, how do you frame what you are? So give us investors a sense of what they're investing into.
So look, in my career, mining is a terrible business. I am crazy to be in it. You're probably even a little bit crazy to interview it, because your chances of success are about 1 in 1,000 to make a grassroots discovery and then take and become a mine. Okay, so that's not a good business model to be in. However, with like any business, if you have the right skill set and the right people, it tends to happen more than once. Okay, I know what we have. We have what's going to be a mine. Okay, I don't have a feasibility or a resource or anything yet to confirm that, but when you have a mine, when you drill, and the more you drill, the surprises are positive. That is the telltale of what a mine looks like. Most of the time you drill, and the more you drill, it gets worse. This one gets better, and so you have to go hard when you find one of these.
But you talk about the risk return profit. Yeah, and I'm more mad than you think. I bought a copper mine since we last spoke. So yeah, so about that later. Is you've got to be cognizant, not just in terms of the control of the money, but what the data starts telling you. So it's great now, but all empires fall, right? So the results may change, and then that will change your decision making, presumably along the way, right?
Yeah. So look, once we stop growing, whenever that might be, hopefully it never is.
Yeah.
We'll start to infill and go to the next stage, which would be a resource estimate, and then obviously the related studies that would follow after. That's when when you found the margins, you stop, and you infill.
Right. Right. But there's nothing in the market at the moment, because you've got the cash, that scares you at things.
No.
Right.
No. We've got to look. If the picture for gold was vastly different in terms of its fundamentals, I might be worried, but man, the central banks are just hoovering this stuff up every month.
Yeah.
Right? There's a bid under the market. It's why it doesn't go down in the face of real rates, be going positive from being negative, and things that generally affected gold's holding up very well. So,
right.
I think it's biding its time till the economy rolls, and then it's going to really turn up when it has other fundamentals in its favor, not just buyers.
Right. Okay. Well, yeah, they've been buying bigger than they've been buying in years, for sure. Tell me the breakdown in terms of the gold, silver, copper ratio.
Yeah. So we are primarily gold deposit. It's about 50% gold, 25% silver, 25% copper.
Okay.
That's typically what you see in our intervals. And the reason it is that is because of the vein overprint. If we didn't have the veins, the gold grade and the porphyry would be only typical, like 0.2 to 0.3 of a gram, but we're running, gram, 2 grams of gold in many holes over long intervals.
Right. Okay. And given you've got all this money, why are you even here?
Well, because just like, our share price hasn't gone down as much, everyone, but we don't have enough liquidity. So if we can get to more people and share our story, we can hopefully make the money, and it'll snowball higher.
Right. And it gives that register profile. How many institutional, retail?
Oh, it's a tough one this year. If you're a contrarian like I am, that's very bullish, but very few buy-side institutions here. It's littered with corporates, people who want to lend debt or streams and those kind of instruments. So
always useful to know who's here at the zoo, I guess.
yeah, it's very few buy side. It's and very little Europe. Maybe less than 5 funds out of the United States and a handful of Canadian.
Okay, and so what I want to, I should be careful with my questioning. Your share register looks like what?
My share register is in management and insiders own about 45%.
Okay.
And then we have 2 large institutions that are maybe a combined 17%. One's Canadian, one's domiciled in London.
Right. Okay. So that's I'd forgotten that you guys had such a big insider shareholding. Just for now, not much you can do about that because you're not raising any money. But are you cognizant of that may not be the right balance or mix going down the line when you do start to raise money?
So look, we need to increase our liquidity, and that will be the point going forward. But we are hopeful that we'll be able to demonstrate growth and raise that liquidity profile with financing next year or the year after at a better price.
Okay. Well, people looking into you, obviously things are going well. Not fully valued yet, you'd argue, I'm sure.
Well, I mean, this is the $1 million question, but yeah, I mean, we sold our last company for almost $2 billion. I think this is going to be bigger and better, ultimately. How much dilution do we take on the way to get there? But, we've got a tight structure. So our market cap's around $275 million US right now. It's got a long way to go.
Okay. But like I say, be interesting when we find out what the Fed's doing. Be interesting when we see what gold price starts doing as a result of that. Be interesting. You've got 18 months of cash ahead of you. Let's see what you can do. Still a growth story. Love it.
Good chatting.
Thank you, Ari. Appreciate it.